This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to give you a market update. This is as of Thursday's close for Friday morning. I want to go through the entire market conditions and then go through the trend and momentum in each of the time frames. We're at a critical point, and one of the things I want to get across today is that there are times where you really want to step on the accelerator and be aggressive, especially on the long side. Like if we have a trend in place and we have a really good conditions, you want to be exposed. You want to have exposure. And then there are times when you kind of want to have the defense out on the field. And I think this is one of those times, and I'm going to explain why. So let's go ahead and get into this now. As you know, I've got these market conditions lined up here. I'm going to do the trend and the momentum. They're all still sitting in the neutral camp. Let's start from the bottom though. The sentiment did we did see more bulls. We moved up from like 41% bulls to 47% bulls. And now the difference between the two is at 17, plus 17. So we're getting up into a region where, you could think we could get a pullback, but it's not a really solid signal. And then if we look at the overbought, oversold oscillator using an RSI 5 on the weekly, we haven't been able to get this to reach overbought or oversold throughout this period. This signal here was the last time we had a really quality signal, and we had a negative 19% when it comes to the sentiment number. So this was positive, and this would have been positive. All right. So we haven't had that, and we haven't had an overbought reading like we had here. Right. So even though this signal crossed above the 18, when we get too many people bullish and we get overbought and overbought reading, you want to be a little bit more careful and potentially even look for maybe trade setups to the downside if you're a trader. So that's how I would use these bottom two categories. I know I keep repeating myself, but it's really important to understand we haven't had a really good signal lining these up in either being both positive or both negative or both positive. Now, the one thing that I think flies in the ointment of a big decline here is that we don't have the volatility in a position to tell us that normally you'll get a volatility increase before the market gets hit. Okay, it's not usually it doesn't coincide exactly with a market peak or something like that. So if we had this move to the downside, I'm sort of expecting some kind of a little mini rally or something like that. And then if in the way that plays out, I'll go into that in a minute, we should start to see this line get through this line and have this start to turn. But in both cases, the daily and the weekly, they're both the average true range. The volatility is decreasing below its moving average, so they're both considered positive right now. Normally, we're going to see an increase in volatility prior to a decline. So anyway, that's kind of where we stand there. Let's go ahead and get into the actual S&P chart. So here's the big issue. We have a decline from last year, starting right at the beginning of the year, and then we get this rally. Now, we did fail at the 18-month in the middle of last year, but that was a flat 18-month line. Now this line is turned down, and what I have been saying over and over again, that if we fail at a declining line, right at this key 4,000 area in the S&P, 4,100 was the last peak, something like that. If we fail there and turn down from there, you have to be prepared for something a little bit more significant to the downside. We can look at things in all different types of ways, but one thing that I try and avoid is a failure at the 18-month. If we turn down from there, I would rather put some protection on and then be stopped out than just sit there unprotected and live through some kind of a decline. Because as I've showed you in the past, when we get that scenario where we fail at a declining 18-month, it usually does not end pretty. So when we get that kind of a pattern, we have to have the defense out on the field. Now, that doesn't mean it's almost like buying insurance for your home. You don't hope that your house burns down, but you're certainly happy if the house burns down that you have the insurance, okay? So you might take a loss or two in here, putting protection on. But to me, it just makes a whole lot of sense right now to be a little bit more careful, cautious, defensive, because we're failing at this trend line again, which just amazes me that we haven't been able to get enough strength to get through this trend line. That's 1, 2, 3, 4, 5 touches, pretty rare occurrence. All right. Now, it doesn't mean it's going to happen. We could just, like the last time, we dropped down and we didn't drop down that far and then we turned back up. Maybe this time it only comes down to here and then comes busting through this area. And then we get a little bit more definitive action coming back up through here, coming back up through this prior high. Maybe even we get through the 18-month line. And if all of that happens, then we're probably not in the same kind of risk category that we are right now. I mean, right now we're below the declining 18-month. We're below this trend line. We're still failing below this prior peak. And even though we've rallied and turned the 18-day up, we don't have enough momentum confirmation because ADX did not get above this prior peak. So I was hoping the hourly strength here would spill over into the daily. If you've watched my videos over the last 3 or 4 weeks on these Fridays, this is what I've been saying. We get this move to the upside. Can it spill over and show strength on the daily time frame? And if that's the case, then we have a chance to keep going. That hasn't happened. And not only that, look at the strength that's taking place on the sell side. Now, if you're being real aggressive and you were watching this, you could have potentially said, you know what, we get this big red bar to kick things off after strong ADX, and then we couldn't get above 25. This was a pretty early warning sign. I don't typically recommend doing that unless you're protecting a portfolio or something like that. The other way you could do that is play this first pinch that triggered just in the last hour of the day. Again, I would probably only do those trades if I'm looking to be hedging. And the reason is that I'm really doing an hourly trade with a 10-minute trigger. I'm not doing a daily trade because I'm still above a rising 18 right now. I'm sitting on it right now. So if you think about it, we had the 1, and now this is a little mini 2. The problem is it hasn't retraced. Hold on, let me do this right. Let me just put up a little fib grid so we can see this. You see how it hasn't retraced a third? And normally I'm looking for a 2 to get at least a third. So here's how I would do this. If I were going to put this hedge on here, then I got to give this a little bit more room. I'm probably going to give it up here or possibly like above the midpoint of this big red bar, something like that. I got to give it a little bit of room because what could easily happen here is this could come down like it's done and then maybe get one more retracement up before it turns down. Now, it's also possible it's not going to turn down. I mean, it's very possible that the 18 days is going to hold and this turns up. I'm just looking at the price action and I don't like it. I don't like how this traded yesterday. It opened near the high, got a little push, and then just was down all day long. And some kind of volume expansion that we're seeing, kind of like we saw up here before it started to fall a little bit. So we're at such a high risk area that I think we need to be a little bit more careful right now. Now, here's what I was going to say, that we've done a 1. If we can get the 2, great. But even if we come down through this low, you could call that a 1, 2, 3. All right. I know it doesn't have the qualities that we're looking for with the third retracement or 38% retracement, but you'd have a 1, 2, 3 sort of confirmed by the fact that we're breaking the 18-day. So if we have those two things in place, then yes, I believe that is something that you'd want to make sure that you're protecting your longs, putting a hedge on, or I don't like to exit longs just because the market's doing something. But if my stocks are breaking, any signs of breaking, or if I want to raise the stop or tighten the stop in this situation, I think that's a smart thing to do. So we have to be really careful right now. And the reason is all of these things coming together. We've got a declining 18-month. We've got this trend line in place. And the other thing that I haven't mentioned is look at what MACD has been doing. We had the divergence here. We've had this rally, and we've got this reverse divergence. This is making a lower high. Price is making a lower high. And this is making a higher high. But now look at what's happening. This is getting ever so close to that 0 line without getting a break to the upside. So, even if we lingered here for a couple more days, it's not in a strong position because all of this is taking place below the zero line. We don't have any strength in the buyers. We have worked off. We've lost strength in the sellers, but by not bringing up strength in the buyers, the sellers are still in control. I hope you can see that. Without strength in the buyers, the last group to be in control is still in control. All right. We're just in a pause phase right now. Last thing I want to mention here is this 3,800 level. This is a no holds bar level. If we come down through that, you've got to be, it goes back into a no buy zone. I mean, you're kind of in a no buy zone right now, failing at 4,000 and being another failure at the trend line. But we are still above the 18-day and we're still above the 18-week. If we come back down through those two lines, you got to be back in a no buy zone. And here you probably need, if you have longs on, even if you're playing longer term, you're going to want to have some form of hedge in place because the risk of this getting a little uglier is definitely going to be increased. All right. So we got to be really careful right now. And I'm hoping this is just a false alarm. I really am. But I'm not going to mess around with this. The way this is trading, the way this failed at 4,000, the way this has failed at the trend line, and it's below a declining 18-month, we have to be careful. All right. That's the update for the week. Go ahead and post any questions or comments. Thanks.